Hey everyone, Nick Shaheen here looking at Roku. I haven't done a video on Roku in a while. I can't remember the last time, but anyway, called a pretty good few weeks on it as far as trading is concerned. Shorted it here with two stops. Those were my two stop potentials, and then it played out. I'm not against the stock. You know the story. Fundamentally, it's up to you. Technically, it's a good stock to trade. Long term, if you believe in it, then shut off this video because you're owning it for the long term, regardless of what I say. For the short term, there's a lot of information. So if there was no earnings tonight, this is a breakout in progress. This is a 240 4-hour candle. Prior fail, so the assumption is it's going to fail again, but onus is on the bull to take it out. So if they do take it out, then it becomes a trigger. And it kind of looks like a cup and handle, a big dip and a smaller dip, meaning the bears couldn't even come close to doing this kind of damage. Well, here they had the help of COVID, so if you erase this, you can still see a bull here if you ignore this. And the upside should be like 170 plus. Having said that, there's going to be a lot of fighting over the 150, if not also the 141, 142. So it won't be a straight shot under normal price action, but with earnings, it can certainly be. Just look at Twilio. So the earnings reaction tomorrow is completely guesswork. I don't care what you think you know about the report. The CEO themselves couldn't tell you how their stock is going to trade at the open because we don't know what people are looking for. We don't know what other people are going to say. We don't know what they're going to say. Google's CFO broke the rules, kind of the unwritten rules, and started blabbing her mouth about some good stuff when the stock was struggling. And then, boom, off to the races. Then she apologized and withdrew it. But the CEO was okay for the CEO to say something like that, but the CFO was kind of weird. Anyway, so we don't know what's going to happen. Literally the next day, at least in the morning, is a complete binary event. It's unclear. Look, it's a square. Dip, huge dip, and then a huge rally. So it's a coin flip. Now, if you told me that there were no earnings, I'll tell you I'm ready to pull the trigger on the long, and I would do it via a June debit call spread, for example. Speaking of which, let's see what the markets are pricing in. So this is the options table for this week for Roku. The implied volatility is 250%, people. So if I buy a single leg, I'm paying through the nose. If I wanted to go long Roku, I would do it in spreads, for example, at least, because that neutralizes that, quote, expensive thing, because I'm buying and I'm selling. So I'm buying an expensive one, but I'm also selling an expensive one, so it kind of like offset each other. But even then, the spreads are pricing in weirdly. Like if I go to, it's just weird. It's not, I can't describe it. It's just not normal. So the way to normalize it is to go out in time. They get more normal the farther out in time, because here is just the event jobs tomorrow morning, and then you've got the COVID bullcrap going on. The VIX is still up in the 30s, 40s, whatever, and then you got the earnings report. So it's like everything that could be amped up is amped up. Therefore, the implied volatility is huge. So and yet they're only pricing in a $15 move up or down. I think it should be more, the price. So if somebody's buying the straddle, they're going to pay up $15 eyeball. And then they need a $15 move or more to start making money up or down, the straddle itself. So the markets are saying this week, tomorrow, is going to move plus or minus $15. Anything outside of that is not likely. That's what they're saying. I'm not saying which way it's going to go. So the better way to trade it, using June options. And I would go $15 up and buy a call spread, for example. That would be an quote affordable lottery ticket with realistic expectations. I'm not buying a super high lottery ticket to where there's no way it's going to get there. So I said $15, right? So $15 would put me in that zone where I said could be the target of this breakout. So if they say something nice, if the expectations are low enough, my expectations are super high for this. Because if you can't tell me that it's in this environment where nobody has anything else to do but watch and stream, and you have no extra expenses because you're just streaming, you're the pipes, and more water through your pipes should be more income to your pocket. If they can't hit a home run with this as far as profitability, I would seriously doubt their long-term outlook set up the way they are. They're going to have to find a new branch to bring them money, because this is ideal. Netflix blew out the numbers as far as subscribers, right? So people are watching. Everybody else, I'm streaming. My whole family is streaming except my son, and he just doesn't watch TV. He streams other stuff which doesn't require Roku, and I don't use anything from Roku, but people do. And if they make money on the streams and the ads and whatever, then they should have a perfect setup. This COVID is perfect for them, unless I'm missing a piece of the pie. So anyway, technically looks bullish. I would buy the dip towards 110. If 110 is lost, then this is the secondary support level where there is an open gap. If you believe in closing every gap, then 96 should be in the cards, 97. I would buy that dip too. So if somebody buys that dip, they can probably add down here. I'm not saying buy the dip. I'm saying if it happens, I would be tempted to do it. All right, Nick signing out. I will do another video follow-up after the fact and see how we did.